Talking about the whole the financial thing that's kicking off, they've got the crunch going on, but it turns out that the banks are still not letting the money go out into the system that the government gave them. Earlier today, I grabbed Jonathan Davis, and he's the man on the line for us, and I asked him, what's going on there? The banks will not give out the money to small businesses for mortgages, etc., and this is his response.
Well, there's a surprise. There's still enormous fear out there, Ronnie. The banks know, although they won't say so, that everyone else has got huge, dodgy debts on their books. So they can't lend to each other because if they do, they don't know if they're going to get the money back.
So nobody will use the big R word, recession, but we're in a recession. I think it's well, and you've documented it yourself. We're in this recession. So what will take the banks to lend money? Because what we've got is small businesses who can't pay their bills until they get money released from the bank. So how's that going to work?
It will come through in due course. It's not going to be overnight. We're already on a track of reducing interest rates, and this will help to some degree, and that will bring back some streams of confidence into the system, which will therefore then reduce the interbank lending rate, which is different to the Bank of England rate. The interbank rate is the rate that the banks charge to each other. So when the interbank rate comes down, then that will bring some money into the system, which will then bring it out to the real world. However, people must be under no illusion. We are not going to get back to the crazy days of 2005, 6 and 7. It ain't going to go back there for years. And they were saying, because Gordon Brown was saying he wants the borrowing to go back to last year. I thought when he said that it was a weird thing for a start. Then is that not why we're in the trouble we're in? But, that realistically is not going to happen because the confidence is gone. What I wanted to say as well, Jonathan, was, the government can do everything right, but if these panickers on the stock market floors, if they don't respond like adults, then we're just going to end up with panic all the time. Well, you talk about adults in the respect of like maturity and immaturity. These guys are in the business of making money, and if they sense or smell that the other guy's going to sell, they're going to try and sell first. So, the reality is that they are simply reflecting what's truly going on in the real economy, or is just about to. And remember, the stock market forecasts the real economy. The fact that the stock market fell from October last year before we were in recession just proves that. It's always forecasting. The stock market is bouncing around at the moment, but I must say to you that we're at the FTSE level of 4,000. It was 6,700 a year ago. It's 40% down. Now, I'm not immediately going to say, oh, well, therefore it's a screaming buy, because I don't think it is. But I would say 60 pence in the pound on a medium-term view. We're talking people's long-term savings like their pensions. On a 3, 5, 10-year view, that's probably not a bad time to start, and that's the operative word, to start entering into the market. Not big time, not 100%, but perhaps chipping away and starting to come back in. 60 pence a pound might be not a bad point. Chartered Financial Advisor Jonathan Davis from Armstrong Davis, based in Hertfordshire. I don't know about you, but you see that? Now maybe it's the time to start going to the market?
Every weekday afternoon.